Welcome to another Wall Street Informer production on WSI TV.
Welcome back for another episode of WSI TV. I'm Sean Bauer, Chief Editor of Wall Street Informer on wallstreetinformer.com. And as you can see, Jordan Bishop is back from his trip to the UK. How was it, Jordan?
It was great, Sean. You know, I got a lot of interesting information for you on the FTSE. We'll get to that a little bit later, but I'm happy to be back.
Yeah, fantastic. And Jordan, while you were gone, I covered some of the warning signals the market was giving us. We're going to get into that a little bit more in just a minute, but we're going to start here first with the versus results.
Yeah, you know, and your Tesla really took it this time. It broke that line of resistance that we outlined on a previous episode. And it broke out for an 8.8% gain, which is fantastic.
Yeah, if you played along, well done there. Jordan, your MIXT, is that right?
Right,
yeah. It still looks really, really good. It's pretty much even from where you got in at.
Yeah.
But of course, it still looks like a really good stock right now.
It's still in prime position. You know, it's had a few up days as the market's gone down, so that's a very strong sign for stocks. You know, but we'll see where that goes.
Yeah. But unfortunately for you, after losing that versus round, our tech stock round.
Yeah.
Are you ready for the Wheel of Misfortune here?
I'm ready for it.
All right, let's do it. All right, now we've added a few new things here to the Wheel of Misfortune, including the airsoft shot and some shock tanks. That's kind of one of my favorites that I want to see you go through, Jordan. But are you ready to spin this thing?
Yeah, let's do it.
All right, let's see what we get. Airsoft shot it is. All right. So you're going to have to take a shot from an airsoft gun.
All right, so as you can see, I got airsoft shot. It's a new one. It'll be very interesting. It's self-explanatory. We'll probably get Operations Director Mark Edwards in here to shoot me with his airsoft gun.
Yeah, he'll be excited about that. But that'll be next week. For now, we're going to look back at some of the warning signs we're still getting now, especially from these major indexes. Right now, I have up the chart of the S&P 500. This is actually from Thursday, right before the close, I believe. But the one thing I really wanted to point out here is this really solid downtrend we can see forming over the top of the price of the S&P, Jordan.
Yeah, and you know, the mood around the market was a little strange on Thursday when it was closing, because it definitely closed up, but it's still, you know, abiding by that downward trend that we have outlined by that blue arrow. Right,
and what we saw going up the entire way was that it was climbing that 50-day moving average.
Yep.
Since it dipped below that, we were showing you the warning signs about that last week. It actually finished just below that 50-day moving average, so it's still kind of playing by those rules where that's kind of a legitimate line of barrier.
Yeah, and I know it was above it for a little bit in the intraday, but it closed below that, and you know, we always go by closing price. Right. And another interesting thing I noticed too is, I mean, you won't see it on the previous chart, but there was two consecutive selling days, and then we did have a buying day, but I'm still not quite convinced, you know, because if you see here, the 20-day moving average crossed below the 50-day moving average, and that's a very bearish sign.
Absolutely. Anytime you see moving averages cross over one another, I should say, whichever direction the cross is, that's kind of where you expect the price to go, especially in the very near term. And Jordan, not all the major indexes look like this. I think the NASDAQ is actually taken off a little bit.
Yeah, the NASDAQ actually looks pretty good right now. It's I know it hit an all-time high. It was very close to it. But you know, we go by the S&P 500 and the Dow Jones.
Right, yeah, well, if 2 out of the 3 are down in this really solid downtrend that we're pointing out, and the New York Composite, which is kind of a collection of everything.
The NYA,
that one's also down.
Yeah.
So we're going to go by those. Just keep watching this downtrend as it forms and trade based on that. But the other thing to note here, Jordan, is the financials. So we look at the chart of the XLF that we have up here, and we can see a really strong line of what looks to be support right now.
Yeah, I mean, this is very interesting because lately we've seen that the financials have sort of led the market into whichever direction that it's gone in, and the financials started to drop quite drastically, but it's bouncing along that gray line that you're going to see on your screen right now, and it doesn't seem like it wants to pierce it. But if we do see that gray line pierced, that would probably be the final warning
catalyst,
sign.
Right.
Exactly.
Yeah, exactly what you need for the market to head all the way down to the 200-day moving average.
Right, which is what we've sort of been waiting for, you know.
But precisely.
We'll see how those signs lead us, and you know, we'll keep you updated with that.
Yeah. And I think one thing we can sort of see as well is how close the FTSE, which is the London Financial Index,
right, yeah.
how close that did look to the S&P 500, and a little bit about why you went over to the UK, Jordan.
Yeah, if you remember from last week, in my video report that I sent you, I spoke about how the FTSE was climbing up the 50-day moving average. It was going sort of parallel with the S&P, the American market, and then it finally slipped below that, and then it just, as you see on your screen right now, it tanked. You know, and this could be an indicator that the American markets might be soon to follow.
Right, nothing really works in a vacuum, even though we're always talking about, I mean, the New York Stock Exchange, the US stock market. Nothing's in a vacuum. Everything's impacted by other things. Mm-hmm. And whenever you have something like the FTSE, the London Financial, looking really closely related to, you know, the S&P 500, whenever it does something like this, you can sort of see it as a leading indicator of what could happen to the S&P 500, especially if the financials, the XLF breaks, like we just talked about. Definitely,
and since we've seen this slip in the FTSE, we're going to be keeping a close eye on the S&P 500, on the whole American market in general, just to see if it follows some of those signs that the FTSE took, you know?
Yeah, but I think to just take a step back, I mean, still overall long term, it's still a very, very bullish market.
Right, you can't go against that. You know, you have to go with what the market's looking like right now. We're just sort of, you know, setting you up for how it could could eventually turn out.
Yeah, this is really all it takes on the short term for the market. Just seeing how it could come down like the FTSE just did.
Right.
But as we pay attention to that, as we trade accordingly, we're going to move on to our next versus round.
Yeah.
And now we're actually going to do short selling, sort of in accordance with what we're seeing with the market, in the short term anyway. You know, we normally only do short selling in a bear market, but since we keep changing it up, we want to challenge ourselves, Jordan.
Yeah, definitely.
And just for anybody who doesn't know, whenever you short sell, you make money whenever the stock you choose goes down in price. I know it's sort of a weird topic for some people to wrap their heads around, but you're going to win if your stock dips more than the other person's.
Right, exactly. And you know, I think I'm going to take a very strong stance here. I've chosen to short sell UPRO, which is basically the ETF that covers the S&P 500.
Yeah.
So, I mean, as Sean said, I am betting against the UPRO. I'm betting that it will go down.
Yeah. I mean, you're betting that it's going to keep riding that trend that we just pointed out. So, yeah, I'd say that's a really good trade there. I'm actually going to go with CF, which is CF Industries. It's right at about 26.50 right now. It just dipped under one of those moving average lines that we keep talking about that are so important in technical analysis. So we'll see how that does, Jordan. Yeah. Do you have any final notes for us this time?
I do not this time. You know, I pretty much gave you all I needed to give you about the FTSE last week and this week. You know, just follow those markets, watch how the S&P and the American markets react to the English markets. And you know, we'll see where we go from there.
Yeah, absolutely. Well, it's good to have you back. Thank you for being with me today, Jordan.
Thank you, Sean.
And thank you all for joining us. We'll speak to you next time.
Cheers.
Thanks for watching another Wall Street Informer production on WSI TV. Be sure to visit wallstreetinformer.com, where you can become a member for free and gain instant access to the secrets of market millionaires via the Wall Street Informer Vault. So go ahead and claim this gift for free now at wallstreetinformer.com.